Hey guys, so today I'm going to do a little presentation about trading psychology and why most traders fail when it comes to trading psychology and how to improve your overall trading psychology. So let's just get right into it. The first thing I want to talk about is equity curve and understanding realistic equity curve and understanding realistic expectations. So what you see here is a proven track record. Now it looks great, right? Everyone would want a track record like this. It looks beautiful. Got a beautiful equity curve that steadily rises and steadily goes upwards. And you can see that this guy has a win rate of about 45%, let's say a 1-to-3 risk to reward ratio, but he does end up taking losses. Now this is kind of one of the things that I really want to dial into, you guys. Taking losses is unavoidable, we all know it. However, no matter how many times someone says that taking losses is unavoidable, it's always going to be really hard to understand that they have to stick to something even if they're taking losses. So you can take a look at this guy. So he has a win rate of about 45%, but in this equity curve, let's call this 1 year's time, in this equity curve, this guy still ends up taking 9 losses in a row. Now, the thing is, the majority of new traders and even some experienced traders, they'll switch strategies after 4, 5, or 6 losses. Now you can see that this guy, having traded this strategy for years, still ends up taking 9 losses. The issue is that most people, when they've been trading a strategy for 4 to 5 months, expect to perform better than this guy who's been trading this strategy for multiple years. But still, this is a great track record. The unfortunate thing is that most traders won't be around long enough to even get close to something like this because they'll have moved on to the next strategy before they even tried their own strategy for a couple of months. Now you can see that this guy starts out the year pretty well with 2 winning months, but then at the end of the year you can see that he did end up losing 4 out of 12 months. So in 4 months this guy kept on losing. So from March to April, basically from March to May, this guy went without any payouts. If he was trading a funding account, he went without making any profit. He was losing money for 60 days straight. Now ask yourself, are you going to be able to sit through that? Losing for 60 days straight, not getting a payout, maybe even getting close to blowing your funding account, whatever it may be. Are you going to be able to stick to that? Or are you going to look on Discord or on social media and look for someone else who might be doing better and then switch to that strategy? Now, most traders that are going to be watching this, if they're really truly honest with themselves, I'm fairly sure that the majority of them would switch strategies as soon as they lost money for 60 days. Once again, let me just remind you, this is the guy that has been trading this exact strategy for years, and this is his track record. Now, traders will compare themselves to this and feel like they should be doing better, even though they've only traded their strategy for a couple of months and they don't have nearly as much backtested data nor live data on that strategy, but they feel like they should be performing better than this guy. So why do so few traders achieve it? So that's a good question. If I were to summarize the main things, it'd probably be greed, FOMO, and impatience. So what most traders want is they want to have consistency. They want to consistently get payouts. They want to have a proven track record. They want to be able to prove to themselves that they can in fact trade profitably. They want to have the confidence to trade profitably. They want to have large capital to trade on, and they want to have great psychology and great results. This is what most traders want. I'm fairly sure this is what pretty much every trader wants. Now, the thing is, the way to achieve that is not that difficult if you were to keep it systematic. The reason why so many people fail at achieving that is because they let their emotions interfere with it. Now, basically, from a simple standpoint, it's not that difficult. What you want to do, you want to make sure that you understand your concepts, and you want to make sure that you're going to master one system, one strategy. After that, you're going to want to make sure that you understand probabilities, understand that there's no point in trying to predict where the market's going to go next. It's simply all about following a systematic edge that works. Why does it work? Because you've collected data on it that shows that it worked in the past. You don't have to try and predict where the market's going to go next. We don't have to know exactly why the market moves the way it does. If you go and take a look at all of the Robins Cup winners, they weren't trying to predict exactly where the market was going to go. They simply created an edge based on simple rules. That could be, for example, a couple of moving averages, support and resistance, supply and demand, Fibonacci, whatever it may be. You don't want to try and predict exactly where price is going to go next. There's no point in trying to analyze every little thing about the markets, because the markets for the most part are random. That's the whole point of probabilities. So make sure that you understand probabilities and make sure that your strategy is based on a large sample size of data. Make sure that you've proven to yourself that it works in the past. And also, make sure that you journal everything that you've done. How are you going to feel confident in a strategy if you forgot what your trades look like? Now, I'll go over my trades in a second too, and I'll go over my FX replay data. But the reason why so many good traders are confident is because they have live data, they have back-tested data, they understand probabilities, they understand the psychology, not only of probabilities, but also they understand the psychology of money. How do humans react to losing or making money? It's stuff like that. It's understanding that. See, a lot of traders are focused on the wrong thing. They're focused on improving their technical analysis all the time. It's funny, whenever I do a coaching call, I'll ask people, when you were first starting out with trading, were you profitable for the first 2 or 3 months? And a lot of them will say yes. And then they'll be like, why is that? Well, the reason that is because at the beginning of your trading career, you didn't know anything. You only knew what you had to know in order to trade your strategy, which is usually why at the beginning of your trading career, you're actually performing better than you are once you're 2 or 3 years in. Because you don't really know. I mean, assuming you've got your risk management on point, right? Which is usually where it goes wrong with beginners. But beginners tend to perform well, basically because they just do exactly what they know and they don't know too much. And it should be like that, to be honest. Usually, and this is how it went for me as well. When I started out, I was trading a simple strategy. Then I started studying technical analysis more, and I got better at analyzing charts, but I became a worse trader. And now, a couple of years later, I am back to trading a very, very simple strategy. Understanding that is highly important. How do you do that? You're going to want to journal. If you're a member of ours, you get our FX Replay accounts, and you basically get access to our FX Replay accounts, and we'll be basically going over your trades together. But this is one of the things. How do you achieve that? You collect data, you journal your data, you go over that data with a mentor or just by yourself, and you try and see if there's a pattern in your losses. You try and see if there's anything you can eliminate from your losses to bump up that win rate a little bit. Now, don't go and do that after every 5 or 10 trades. Take at least 40 to 50 trades and then analyze it. And then take a look at your trades, see if you've been doing something wrong. Why is that? Well, let's go back to that part of probabilities. It's because of probability. There's no way to actually predict the markets. We don't know exactly how the markets move. We can only speculate and basically guess where the market's going to go. So if you keep noticing a pattern in your behavior, if you keep noticing a pattern in your losses, make sure to eliminate that from your trading, and then from there on out, go further. Now, this sounds pretty simple and it sounds pretty straightforward. And I bet if I were to tell a complete beginner that this is what he had to do, and even the experienced traders, the ones who are really profitable, if I tell them this, I'm fairly sure most of them would agree with me. Now, why is it that most traders don't listen to this, and why most traders don't do this? That's simple. Human emotion. We as humans are not designed to basically act like robots, which is essentially what I'm asking traders to do underneath this part where it says how to achieve. But human emotions interfere with us. There's always the comparison. Let's say you're taking 9 losses in a row. Let's go back to this guy. Let's say you've been losing money for 60 days in a row. You've lost 9 trades in a row. And you don't have the data that really backs up your claims that you're trading a profit build strategy. It's really easy to go on Instagram or go on Discord and check someone's profit or losses channel. And what you'll see, this guy passed his funding challenge. This guy got a 20K payout. This guy got that. This guy got that. And it's really, really easy to start comparing yourself to these people. And that is oftentimes where a lot of traders will go into the cycle. They'll know subconsciously that they're not supposed to switch, but just seeing that 20K payout makes them think that they have to do exactly what that guy is doing. Not realizing that that guy has not only been trading that strategy for a long period of time, but also that guy also has losing months. So in 2 months, it might be the other way around. Your strategy might be the one that's profitable, and his strategy might be the one that's losing. But you're not going to know because you've stopped trading your own strategy. So these are just a couple of things. And then there's also the changing the rules. A lot of traders will be like, all right, I noticed that price has been moving 1 to 2R instead of my regular 1 to 3R. I'm now going to switch my take profit to 1 to 2R. I'm going to do that even though I don't have any data that proves to me that this works, even though I don't really know if it's profitable in general because I haven't really tested it. 5 to 10 trades doesn't count, so they haven't really tested it. They don't really have the data on it. They don't know if it really works, but they've just seen it happen over the past 10 or 20 trades. So they feel like that's what's going to happen in the next 10 or 20 trades. That's not how it works. And it may work. It may work for a couple of weeks. But then what you might start noticing is that now all of a sudden your trading plan works again and the 1 to 3 take profits are getting hit, but you're getting stopped out at 1 to 2 because you thought it was best to switch to 1 to 2R because you thought that's what's going to make you profitable for now. Basically bringing me back to trying to predict what the price is going to do. Instead of following an edge that is proven with a lot of data, with a large sample size, you're just trying to predict what price is going to do. Why? Well, I've seen in the past 10 trades that prices run 1 to 2R and not 1 to 3, so I'm just going to follow 1 to 2 from now on. That's not how it works. You're going to want to trade an edge. You're going to want to trade something that's been proven to work. How do you do that? You do that by collecting hundreds of trades. And how many traders actually collect hundreds of trades? Not a lot. I know there's so many people out there who don't collect pretty much any trades. They'll either test 10, 20, 30 trades and they'll see someone else do it and they'll be like, all right, this works because it works for this guy. It's not how it works. So this is usually what most traders really do. Now, I do want to show you guys what happens if you do basically follow the steps. All right, so this is someone who I went over his trades with. We saw that he was constantly trying to predict basically what was going to happen at first. He was trying to predict what price was going to do, switching up the rules constantly. And you'll see, like, for example, he was taking a couple of losses here and he was like, I'm going to switch to 1 to 2R from now on. And it works for a little bit. You see that equity curve going up slightly. And then he notices that all of his trades actually hit 1 to 3R. And now he decides to go back to 1 to 3R. You see that basically changing those rules constantly kept him hovering around break even. Now, when we went over those trades and we decided that, hey, I'm noticing that you're not sticking to one set of rules. I notice that you're constantly jumping around because you feel like the price is going to do something. First of all, there's no room for feelings in the market. That's not trading. And second of all, there's no point in trying to feel something because the market's going to basically slap you anyways. So we decided, hey, no matter what happens, no matter how many losses you take, or no matter for how long you're going to be break even, I want you to test one set of rules. And that's exactly what he did. So you notice that he stuck around break even. He kept on taking a few losses, took a few wins and a couple of losses, but eventually we did go into profit because we just stuck to that strategy for long enough. Now, eventually this guy ended up making a solid equity curve. Now, this didn't happen overnight. Obviously, this took a couple of evaluations. We basically had to check out some of his trades, see if there's a pattern in the losses that he's taken, eliminate those together, and then from there on out, basically scale up and try to bump that win rate up to 40%. Now he's close to 40% with a 1 to 3R. A lot of people will think that this is not good enough. If you think this is not good enough, by all means, keep looking for the Holy Grail. You're never going to find it, but this is a solid edge. This in the long run, even if you run this through an equity simulator, this in the long run is going to make you a lot of money. This is really profitable. And that's also just a quick thing. A lot of people think that this is not good enough. Why? Because there's always this guy on social media in his Lamborghini in Dubai flexing a 55% win rate with a 1 to 10R, bullshit like that. I want you guys to really have realistic expectations about trading. It's about following a set of rules. It's about gathering data, going over that data, see if there's a pattern in your losses, and eventually try and improve that win rate a little bit. But the thing is, most traders won't do this. They'll test a little bit. They'll be like, this is not working. I know a lot of traders would have given up after, testing all of these trades and noticing that it's not working. They would have given up. They would have been like, this is not working. I'm going to try a different strategy. But not this guy. This guy just kept going. And eventually he comes out profitable. And people will see this and be like, oh, I wish I had an equity curve like that, not knowing all the work that went into it. Now, what do I advise people to do to gain profitability and also to kind of train your psychology And I feel like the psychology, oftentimes, this is more of the psychology based on a strategy in my opinion, but I feel like psychology oftentimes basically comes from having a lack of confidence. So I'm assuming most of you guys understand the basics of psychology, and I'm assuming you guys understand risk management and you guys are not gambling. This is more for the traders who are actually kind of struggling with finding consistency in their strategy. So there's a little step-by-step guide on what I would do if I were to start from zero and then basically gain profitability. Now you're going to want to start backtesting with a written down trading plan. You want to collect at least 50 trades using one set of rules. So don't switch up. You're going to want to use one set of rules. Every time you switch up, you're essentially creating a new edge. So every time you switch something up, you're going to want to create a new separate file for that, or a new separate sheet, whatever you may use. So use one set of rules, collect 50 trades, even though they might not be the results that you're looking for. Keep going. Just keep doing what you think you're supposed to be doing. Then go over those trades, either by yourself or with a mentor or with a trading partner even. Go over those trades and see if you can identify a pattern that basically brings down your win rate. Oftentimes it'll be things like not taking into consideration proper basic structure, not looking for good liquidity sweeps, missing out on imbalances, stuff like that. This is especially for the people who are trading supply and demand, but it might be different for people who are trading support and resistance. I don't know because I don't trade support and resistance. But basically, you're going to want to do that, look for improvements, and then you're going to repeat that process until you have a solidified edge, until you have something that works. Once you're in the live markets, do exactly as your edge taught you while backtesting. Did you use one time frame in your backtesting? Yes. Then make sure they only use one time frame in your live trading too. What I'll see happen oftentimes is people will use, for example, the 4-hour time frame in their backtesting, but then once they're in the live markets, they'll implement the 1 hour, the daily, the weekly, just to basically confirm to themselves that their trade idea is valid. That is a lack of confidence. That means you don't really trust your edge. That means you don't really trust your strategy. Go back to the drawing board. Go back and make sure that what you've been doing is actually correct and that your edge really works. Did you trade 1 to 3 RR in your backtesting? Yeah, alright, make sure to do the same in live trading. You're not going to switch up. Why? Because as soon as you switch something up, you're basically going off of something that doesn't have any data back up that it works. It's even stated down here below. Why would you do the exact same thing in the live markets as you have been doing in your backtesting? Because you have data that proves that this works in the past, at least. It's most likely going to work in the future too. If you don't have data that proves your sudden implementation of another time frame or a different 1 to 2 R or a different risk to reward ratio, you're basically going off of nothing. You're basically just, I don't want to say gambling, but you're not really doing what a professional trader is supposed to be doing. All right, so we're currently on the platform FX Replay, and I basically want to show you guys my strategy and why I am confident in my trading. Now, what you'll see here is that we've tested over 500 trades. 500 trades. And this is a really strong edge. I know the P&L is fucked because FX Replay for some reason doesn't log it correctly, but 500 trades is what we've been doing. We've screenshotted every single one of these trades, so we know exactly what our trades look like. Now the thing is, if you scroll down to the part where it says losing trades, you see that even though we've taken 500 trades, 553 to be exact, we've lost 15 trades in a row. This would mean you would have blown your funding account for sure. This means RIP funding account. This means that it would have been really difficult mentally, psychologically to stick to it. And this is where a lot of traders will give up. A lot of traders, after losing 9 trades in a row, will be like, this doesn't work, I'm doing something wrong, something's been going on. But if we go back and look at this equity curve, we see that this is a really, really solid equity curve. Even though we have that losing streak of 15 trades. So why am I confident that my strategy works? Data. I know it works. I've tested it. I've traded it live too. I'm going to pull up my trading journal for you guys and show you that. I've also been trading this live. I know that it works because I have live data on it. I remember, I think May was a losing month for me. Yeah, May was a losing month for me. So I lost a little bit of money in May, and I know, and it didn't really bother me. Why is that? Well, because I have data from the rest of the year. I know I'm up 22% based on 0.5 risk, so that's about 44 RR this year so far. So I know I'm doing well. I know that I'm doing what I'm supposed to be doing, and my equity curve also looks really solid. So why should I be worried about a couple of losses? Well, this kind of comes back down to journaling. How many traders are actually journaling their trades? A lot of people don't journal, at least not the way that I do. So make sure that you have both backtested data, and then in the meantime be collecting live data on your strategy so that you know it works, so that you have actual proof that it works. And I know this setup will work, once again, because I have data. I just want to quickly show you guys another piece of data on FX Replay. This is my friend Joseph. Basically the same thing. You can even see it has these little drawdowns here and there. But why should you stick to it? Because if you look at the overall data, you can tell that this is just a really solid edge. Now I will admit that this is a little bit of a small sample size, only 100 trades. But let's say you double that to 200 or 300 trades and you've got 300 screenshots. That'll ultimately bring you to confidence to basically trust your strategy. And another thing that tends to bring confidence is basically having MyFXBook data. MyFXBook, for the guys who don't know, is basically a sort of like a software that tracks your performance, and it's essentially verified. So as soon as you've got good data on MyFXBook, essentially you can kind of like maybe sweet talk yourself a little bit more into having faith in your strategy. Why is that? Well, because you've got a track record that says that it works. All right, so that was a little presentation about psychology. Now, in the meantime, if you guys have any questions about psychology, first of all, tune in to the live sessions that I tend to do about, well, almost every week at this point, because we always dive into psychology a lot too. But also just DM me on Instagram or Discord. The link is down below. So yeah, I hope this was a little bit helpful to you guys. I hope you guys were able to pick something out of this. Leave in the comments section what you thought of it, and if you got any questions, and I'll make sure to get back to you guys ASAP. All right, you guys have a good rest of your day, and hopefully I'll see you guys in the next video.